Hey, welcome to the first official trading diary entry for the Drawdown Diaries. This week was a profitable one with a profit of about $1,893 realized profit, and a huge chunk of that, over $1,500, was on Robinhood. So I made a couple trades on Robinhood, um, mainly being on the fact that Robinhood was added to the S&P 500 after hours on Friday, September 5th. So I did a couple things to capitalize on the increased volatility in Robinhood. First thing I did was I sold three cash secured puts on Monday. I sold two 114 puts and one 111 strike price put, expiring end of the week. I happened to do a buy right on Friday just because I was like, oh, it's pretty low. I can capitalize on IV for the following week. Um, so there was a $200 gain there, $800 gain or so from the puts, and I did two more buy rights, one of them on Monday, one of them on Tuesday, for a profit of about $500. So my total gain on Hood was $1,520 after the options fees and whatnot. Um, yeah, I'm really happy with how that turned out. Hood is something I really like. Like it's a stock that I really like, and it has high IV, so it's great for premium farming and capitalizing on that. My active stock trading this week was a perfect example of two competing mindsets, the emotional one and the disciplined one. It was a little less smooth than um, my premium selling that I did. So on Monday, I was actually up about $135. I had made some good trades in the morning, and then it got to a point in the morning where I knew my win rate would decrease just because of the time of the day and what I traded in the past. But my ego was speaking to me, and I took four consecutive losing trades, and I'll walk through them. So the first one I did was on Apple. You don't see this thing because I deleted it um, a while back when I was placing the trades. But I entered right around at 237.71 for my first one. Um, and I got stopped out pretty quickly. Um, I took a $20 loss on that. Let's go to the 1 minute chart. It's kind to us. Yeah, so I entered around in here, and my thought process was, oh, I'd been watching it break through here, and I was like, oh, I'll just ride this buy, I'll go. But I was clearly late to the party. I'd hesitated down here, and I FOMO'd into this trade, took a $20 loss. And in the meantime, I took another trade on Zillow for a different $20 loss. And then I came back to Apple because I thought, oh, look, it's rebounding again. Like it was going to go up. It's going to go back and get to VWAP. And so I jumped right back in here and then took another $20 loss. So all told, that right there is a $60 loss within a couple minutes because you see I entered around here and I entered around here. There's not a lot of time there. And there's a Zillow trade in between. So that's a $60 loss already from a $135 gain. Now it's only a $74 gain on the day. So I'm feeling pretty bummed out. Um, and because I'm feeling bummed out, I'm like, oh, I can win this back. You know? And so I get into this gambling mindset, which is not great. And that's when I enter this Oclo trade and I size it real big. I um, enter right around here because I'm like, okay, maybe it'll break this channel. You know, it does not. It tries to, and then it goes right back in, and I take a really fat loss. My stop was way too high. My position was oversized, and my entire day trading profits from the day pretty much were zero. Um, it was quite disappointing, but I was able to walk away after that at least and didn't take any other trades. Tuesday was a really great example of a disciplined set of trades. So if you weren't aware, you're probably aware, NBIS announced a deal with Microsoft on Monday after market, and it shot up to on Tuesday by like 50% or something like that. And I knew that there's going to be a lot of volume, which there was, and lots of volume means generally a really great trading environment. And so I was looking for a pullback and then for it to bounce up, because I know people are going to take profits up here, but if there's good support on this good news, then we'll be able to see a bounce. So I entered here initially on this first bounce a little early, and I broke even on this initial entry. So okay, clearly I need to wait a little longer. And I re-entered a little later after waiting for some of these candles to play out at 87.82. I think it was right around in here. And I took a loss on this because of this pullback. Looking at it now, like clearly I could have placed a wider stop. But I knew I was on the right track because I saw this support here forming. And so I quickly re-entered after getting stopped out. I didn't let that phase me. And just on these two candles alone, I made $150 off of this. Because I was taking profits along the way, and then I was completely out of my position at this point, and I entered another trade here and another trade here, each of these being slightly less position size, so I wouldn't like eat too much into my profits if I lost the trade. And then after this point, I didn't take any more trades. This was end of the trading day for me, and I made about $230 off of just NBIS on Tuesday, so that was really great. Now on Thursday, I faced a different challenge. There was a Google trade on Thursday that I took around here. So Google's a stock I really like. I have a long-term position holding Google, but I also like trading it. And right around here, I get a volume alert for I get a volume candle alert on the 1-minute chart. So I go look at Google, and I see that it has massive buying at the 5-day moving average. That's huge support. Google's a very strong stock, has been a very strong stock recently, and so this immediately to me was I need to take a long on Google. Here I entered 4 calls with a strike price of $240 for 99 cents each, so about $400 position. And I took partials right around in here. So at that point, I'm exiting 2 contracts for a gain of $24. Great. And then I take another portion out when I see it pulling back ever so slightly around here. That's when I get out again. And I never quite see it make it to 240. I exit my entire position before it hits this 240, even though I see this huge buy volume here, and I know there's really strong support, and I know there's buyers here. I take profits way too quickly, and I'm no longer able to ride this beautiful ride up. Even if I even held to here, it would have been incredible trade. The contracts around here were up 80%. They were worth $1.80 around in this area. And they would have been worth far more all the way up in the 240, 242 zone. And so instead of I gained approximately just shy of $100, which is good, but clearly I mismanaged this given how strong this buying was. And that's something I need to work on, is knowing how to manage trades that are in profit and letting them continue to build profit for me. Finally, on Friday, I just traded chop, honestly. I was forcing trades when they didn't really exist, I sized accordingly, according to the chop, and I lost a total of $87 on Friday. And then I walked away. It is what it is. Sometimes you have those days, but I really could have just not traded at all on Friday. Okay, so what are my open positions right now? Because I have a couple of open positions. I have a long open on Humana. Trying to trade a bounce on Humana. I've traded Humana in the past year. I've swung it a couple times back here in this area, and I think it's got potential for being bought up. This is massive sell volume. I feel like it's could be oversold. There hasn't really been much news about it, and so I'm going to take a swing on Humana with the thesis that it's going to, at the very least, bounce back up and retest the 5-day moving average, and where I can take partials, and then see if it can get back up to maybe the 20-day moving average. My second swing trade that I have open is SMR. I entered on Friday as well, along with Humana. It has been holding support at this 200-day moving average, and I said it's very strong support. As soon as it breaks down below the 200-day moving average, I do not want to be a part of it, but until then, I think it's totally fine to be in this trade. Nuclear has been a hot topic recently, and I think it could very easily test the 50-day moving average and continue back up. I'm very interested in Oklo as well. Same nuclear kind of play. Definitely a stronger stock, but I didn't see a swing entry on this. It's a little late, so I entered SMR instead. But I may consider entering Oklo at some point next week as well. My last swing trade I have open is LDI. I entered way back in here, and I've been holding it. I took partials already. I'm still holding 100 shares of LDI just for riding profits. So after all that, the realized P&L for this week is plus $1,893. There were several key lessons. One is having a plan for catalysts for things like Hood, NBIS. Two is having self-awareness when, like, letting my logical brain be far more in control. When I know that it's not a good time to trade, I listen to it and I just step away. And that discipline is going to get me far more ahead than just trying to chase emotional profit. Anyways, thanks for joining me in my first diary entry. If you've had a similar week where you had some great trades or some terrible trades, let me know in the comments. Leave a like, subscribe, and I'll see you in the next one.